All right, thanks everybody, and thank you, David, for once again inviting us for the Timing Research Synergy Traders. Today, I'm going to be talking about your 7 steps to better trading results, and I hope this is something that is going to be applicable to everybody that's out there, because what we normally find is that trading looks really simple, and then we start doing it, and then we find all kinds of issues. We find all kinds of resistance that we run into. So that's really what I'm going to be talking about today. Now, you might have heard of me before. You might not have heard of me before. I've been kicking around for the better part of 20 years now. My name is Doc Severson. I'm an individual trader, performance coach since 2005. I am that guy. I was working for a 3-letter acronym telecommunications company back at that time. And I was a product manager for them. And then I had the providence to attend a seminar about trading. And it was one of those moments where all of a sudden the lights in the window came through and shone upon me. And it was like, this is what you are to do with the rest of your life, son. So since that time, I have been working at that. And I was able to, about a year after that, I was able to put in my notice and say, I'm going to do this for a living. And then what I found was, after I started trading for a living, I had a line of people knocking on my door saying, hey, could you help me do the same thing? And that was a really, it was a great thing, because what you find is, as an individual trader, it can be very isolating. It's just you and the dog, and you're waiting for things like the mail to come by just so you can see another human being. And a lot of you went through this during the pandemic years. But so you get kind of an idea what it's like. So working with other people was great, because it forced me to become accountable for my own performance by helping other people. So I've kicked around some other services like the Options Linebacker, Doc's Trading Tools, Theo Trade, Options MD, ReadySet.Trade, and currently I'm working with 12MinuteTrading.com, as well as running my crypto service. So my specialties are fractal price analysis, which is multiple time frame price analysis, options and futures strategy. And then, because of my own issues, I had to learn to become an expert on the trading mindset. So that led to the first book that I did, which was Hacking the Holy Grail, which is available on Amazon. If you just search under Doc Severson, you can find that. And the other book that I did was based on the fractal price analysis, the multiple time frame system that I sort of assembled. And that's called Fractal Energy Trading. So it's how to understand how to apply multiple time frames and understand the energies that move the markets. It's not the overbought and oversold market of the 1970s anymore. Okay, so that's who I am. My purpose today is to entertain and inform. I've been in trading the live markets every day since 2004. I've made every mistake that a retail trader can make. Much of what I'm sharing today was learned by necessity at great personal cost. All right, so I went through the same journey as everyone else does. And it wasn't until a few years into my own trading career that I realized I was not trading against the market. I was trading against myself. Most people don't understand that, is that you are your biggest obstacle when it comes to performance. So my purpose today is to help you understand why you've been your own worst enemy when it comes to your trading performance, and what you can start to do today to fix it. So we're going to be very actionable here, and this is why we've got it down to 7 steps. So what's the problem? I'm a former engineer. I like to make things visual so you can kind of see where the path that we're going to go on today. So you got an idea of how far we're into it, right? Everybody's got short attention span, including myself. So I like to start out things by defining what the problem is. Engineers like to solve problems, right? This is what we do. The problem is we're all trying to solve is improve our performance, our financial performance. The challenges that you encounter depend on where you are in your progression to mastery. I think you would all agree that you don't start out from day one as a complete novice in trading, and then it's a step function. All of a sudden you bolt on a strategy and you're a master. It's just not realistic. So there is a progression towards this, and it involves taking steps forward, it involves taking steps back, but it also involves not quitting. And this is what makes the difference between the professional and the amateurs. The professional is an amateur that never quit. along the way. And there is a very thin line. There's a very narrow path to success. And it starts with mystification. You're brand new. You don't know how markets work. Trading's fun and exciting. This is where people typically jump on at the very top of a bull market because everybody's making money and it looks easy. Everybody's flashing around in their cars and their houses and showing videos. And so you're unconsciously incompetent because of this bull market that's going on. Success comes easily. You figure, wow, let's get all the money I can and double down on this. Let's get this done in 3 months. So you go all in with everything you have and you get crushed when the markets turn. This is so common. But that leads to step number 2, which is the hot pot stage. Okay, you got crushed, but you're hooked. You start to define your approach and learn how markets move. You wait for your setup. But like touching a hot pot on the stove, you get burned every time you enter. You start getting timid because every time you touch that stove, it burns you. So you decided the problem is the strategy and not you. So you keep trying different strategies with the same result. So this is where I see people doing this. They'll invest into a program. They'll pay some good money to get involved with it. They'll maybe take 1 or 2 trades and they don't work out. And so what they see is this bright, shiny penny over here with some other program that seems to be even easier to operate. So they go thundering over here, invest money into this program, take a couple of trades, probably don't work out. And then they get discouraged until they see this other bright, shiny penny over here and they invest in that program. And it becomes this whole circuitous kind of thing where instead of getting 10 years of experience, you get 1 year of experience 10 different times, or maybe it's even more compressed than that. But I see this all over the place. People looking for the Holy Grail, looking for a strategy that never loses and never puts your capital at risk. That's the hot pot stage. That's usually where people end up second. And that eventually leads to the cynical skepticism stage. Every time you enter a trade, you lose. You joke with your friends that you should take the other side of your trades, right? We've all done this before. Hey, you should take the other side of my trade. You're convinced that it's someone else's fault. So it's the Fed, the market makers, the brokers, the gurus, high frequency trading, whatever it is. It's always somebody else's fault. Some never exit this stage and they quit. Usually not before they get on social media and make a big stink about it, how everything is rigged and it's a scam and everything like that. You see people all over the place in social media in the cynical skepticism stage. Now, if you're able to stay past that, you get into the squiggle trader stage. You buy into the notion that there must be some holy grail study or technique to trading success. So you've got past the point of blaming other people, but you still think that there's some kind of secret. If you can just find a right person to tell you what the real secret is, then you can make it in this business. So again, you keep bouncing around looking for somebody that's got the secret to share, and you're convinced that they're hoarding that secret, that they're not letting it out. And so what happens is you start to find these studies. And I see this on so many people's charts, right? So they start out with a little bit of price action. Maybe they got some volume envelopes. And then, of course, they say, well, you got to have MACD. Oh, you got to have stochastics, or what's a chart without RSI? Hey, what about this new Arun oscillator? Okay, what about, and it's just like they keep piling the studies on until next thing you know, you can't even see the price anymore. You become paralyzed, right? This is scared money in action. This is where you get analysis paralysis. Quite honestly, this is the stage that I find most retail traders are stuck in this phase. They know a lot about a lot of things, but they're just not able to translate that into profitability. That's the squiggle trader stage. Again, to me, that's where most people are at. They're searching for the secret, but they don't realize it's right there in front of them. And those that turn inwardly bound, these are people that say, you know what, maybe it's not the market maker, maybe it's not HFT, maybe it's not the markets, maybe it's me. And those that survive all of the previous stages have a chance to become consistently profitable if they manage to graduate to the stage, if they have the self-awareness to figure out, wait a minute, Doc was saying that, maybe it's me. So maybe let's give that a chance. Those in this stage finally understand that the holy grail of trading is not some study or chart pattern or strategy. It's their ability to understand that trading edge starts with them and their ability to think differently from the rest of the investing herd. And this is so challenging these days because what do we all do? We all think the same, don't we? If you go to buy something, what do? You go onto Amazon.com and you search for the 5-star reviews. Hey, why should you take a risk? Let's let everybody else do the work for us. Let's just fall in line and buy the same thing as everybody else, right? So we are conditioned to do the same thing as everybody else. We are conditioned to socialize our decisions. We're going to just look for the 5-star reviews on everything. We're going to look for, before we join that company, we're going to check Glassdoor and see what other people think about it first. So we've lost our ability. We've lost the importance of independent thought. But inwardly bound is where all of a sudden you start to say, hey, maybe it's me. Maybe it's my ability or inability to see what's right in front of me. And if I focus on becoming a better trader myself and stop worrying about all the other stuff that's around me, maybe I've got half a chance. And this is where things turn around for people. And ultimately, what they want to do is to get the mastery. This is the final stage of the progression for a retail trader where they've mastered their setups. They know who they are. They know what their purpose is in the market. They're not searching and trying to figure out who they are or where the edge is or who's got the best indicator or who's got the best charting package or who's got the best commissions or anything like that. They're not out there struggling and searching. They've kind of figured out who they are and what they do. Trading is actually very easy at this level as the trades literally come to them as they wait for their setups. And I think you'd be surprised if you looked at a mastery trader, what their charts actually look like. They're usually pretty Spartan. They're usually pretty bare. There's usually not a whole lot of fluff on them. They usually provide exactly the information that the trader needs to be able to make a decision going forward. Again, technical analysis to these people is not about predicting the future. It's setting up their system. It's setting up the conditions in which they can make decisions. So that's mastery. Now, a lot of people say, all right, Doc, that all sounds great, but I'm going to skip some stages. I think I'm in stage number 5. First of all, if you claim that you're in stage number 5 inwardly bound, you're probably not, right? A lot of people want to think, they want to project themselves there, but they're not quite there yet. So I've never seen anybody skip a stage due to the way that our brains think. So we have to literally change the way that we think as we go along here. Again, if you go through these stages, you can see that it is a progression for this and thinking differently. I have, however, seen some exceptionally committed traders minimize their time in the earlier stages. These guys were like, is one individual in particular was a supply chain guru that knew how to break things apart and how to analyze things and how the process flow for making decisions all the way through there. And he was exceptionally quick, but he did go through his own struggles on the way up, but he got to mastery in a very, very short period of time. The sooner that you can get to the inwardly bound stage, the sooner that you'll be able to earn your fair share and quit funding somebody else's account. So there we go. That's the problem. This is what we have to accomplish. So now we're going to get into the 7 steps. And I will take questions at the end of this. All right, step 1, you got to think differently about risk. The word risk, what stands out to you when I say the word risk? Do you get a positive connotation or negative? For most people, it's negative. Risk. Ooh, I don't want risk. I've been asked so many times, hey, Doc, what's the best strategy that doesn't have any risk? And my answer is, oh, that would be passbook savings. Go down to your bank and get passbook savings. There is no risk in that unless your bank goes out. No, I mean trading was. Well, you didn't say that, right? No risk it, no biscuit. So you have to take risks to be able to get some type of reward. Have you seen this movie? This is called Free Solo with Alex Honnold. Let me zoom in on this. This dude is going up the side of El Capitan with no ropes. This is all just hands and feet and some guts, right? Just unbelievable. That is probably the most intense movie I think I've ever seen. Free Solo. I'm sure it's out on streaming these days, but literally sitting in my seat watching this in a movie theater, was just curled up in the fetal position. I knew how the movie ended, that he made it through, but it's like, wow. So that guy had no sense of risk for height because he had mapped out everything. He knew exactly what he was going to do inch by inch all the way up El Capitan. And it's an amazing movie if you think about it. Also, another great movie to look at is, and I'm trying to think of the name of the movie. It'll come to me in a minute, but it's the guy, Philip Petit, who walked across the World Trade Center between the two towers, 1,300 feet up, walked the tightrope between them. And that was back in the 1970s, right after or right during the construction of the World Trade Center. Philip, I think it was called Man on Wire. It was a documentary. It was an amazing movie. Watch it if you get a chance. So you have to think differently about risk. We need to think about risk being our friend and not a foe. It's a tool, just something that we need to manage, not something to avoid. We learn that taking the trades that feel bad means that we're trading against the crowd. And that's almost always a good thing. So that's the first nugget that I want you to take away from today, is that if you take trades that feel good when you take them, probably not going to work out. You have to start looking for those trades that, like, as soon as you put yourself into the trade, you're looking for a flight sickness bag or something, right? You like, oh, this is going to not work out well. And you'd be amazed that more often than not, the trades that feel bad to take are the ones that are going to work out for you. You're going against the crowd. And that's difficult to do. We like to take trades that feel good. Since retail traders aren't comfortable with risk, they tend to take the trades that feel good, the ones with supposedly low risk that have been fully vetted by animals on Twitter or Wall Street bets. This is almost always means that you're going with the crowd instead of thinking independently. Again, this is in short supply, thinking independently. We're not taught how to do this. We are taught how to go along with the crowd, and this will almost always get you swept under the bus. Now, there is no reward without risk. If you want zero risk, passbook savings. More risk should lead to more reward if you can manage it. Don't take too much risk that you can't manage. A professional looks at risk as a tool and not something to run from. So a lot of us will eat like a bird and crap like an elephant. Because we're trading with scared capital, we take small profits off the table. Well, I got to take profits off before it can reverse, right? But we'll ride losing trades down the rabbit hole for many different irrational reasons, such as, well, I just know it's going to reverse, or the subreddit said it would bounce, or that Discord server said it would bounce. It's just a paper loss now. It's not an actual loss until I close the trade. How many times have we heard that? Eat like a bird, crap like an elephant. So fear rules our decisions. It does. It's not fear and greed. People talk about the market being ruled by fear and greed. It's not. It's all fear. Greed is actually fear of missing out. So to me, it's the same thing. We focus on what we fear, and what we focus on expands. If we focus on not losing, what do we get? All right, today, I'm not going to take any bad trades. I'm not going to lose. What do? You get more losses. We fear that rallies will leave without us, which is FOMO, fear of missing out. We fear that sell-offs will destroy our account, such as what people were probably feeling this morning, fear of loss. Fear rules every retail investing decision. Greed rarely comes without experience and hubris. Now, here's another one. You got to learn to trade to win instead of trading not to lose. You may not understand the difference between the two, but think about this. A lot of people trade not to lose. If you think about the Super Bowl that happened just a few years ago, maybe it was 5 years ago, where the Atlanta Falcons were up 33 to something. I forget what it was. It was a wipeout at halftime. They were a lock to win the game. And then the Patriots came back and won the game because the Falcons played not to lose. They played prevent defense. So new retail traders don't trade to win. They trade not to lose. And that is something that you'll need to think about next time you make a decision. So risk is bad. Chances are that starting when you were very young, everyone around you was doing everything that they could to remove risk from your life. I see it with my wife and our kids. I see it with my mother-in-law. Can't stand any form of risk whatsoever. To this day, right? Want to remove risk from everything. Your activities, the kids you hung around with, the college you went to, the major you chose, the potential spouse, everyone in your personal circle, as well as society in general, has been trying to remove risk from your life. Risk is bad. So we come to trading with the same attitude. Risk is bad, and we should do everything to avoid it. So you got the deck stacked against you based on your conditioning from when this is, again, another thing that you have to learn to think differently about. You have to think differently about risk. Okay, so that's really step one. Think differently about risk. I'm not saying to be reckless. I'm not saying, hey, gamble it all in the next trade. Look at risk, though, as a tool and not something to be fearful of. All right, that's step one. Step two, specialize and focus. This is a huge one. All of the messages out there tell you to diversify. Hey, don't put all your eggs in one basket, right? Diversify. You've been told to diversify ever since you could listen or watch a TV commercial. Well, you should have a well-diversified portfolio of stocks and bonds. And, you've heard that same thing for years and years and years. And to me, as an individual investor, I would say you will not succeed until you give up that ball and chain, which is called diversification. So think about your competition for a minute. They will typically specialize in one form of trading, one instrument, one time frame, perhaps one time a day. Or never forget the time that I was visiting the CBOE, the Chicago Board Options Exchange, and watching the SPX pit and watching these guys. And that was the most expensive real estate in the world, that 1 square foot that they stood within. And those dudes would stand there all day long for 6.5 hours at the cash market. And they would just focus on one trade, one strike price, one trade all day long. That's all they did. And that's how they made a living. They're patiently waiting for the herd to make a mistake and overcommit to an obvious move. Take the opposite side of that all day long. And that's how they made their money. So your competition are professionals. Oh, it's 28-3 then. Thank you. That was the Falcons versus Patriots score. Obviously, that's somebody's got that burned in their mind. Okay, so again, your competition professionals that just do one thing. Now you, on the other hand, you're not focused. You got dozens of things going on at the same time. You're trading several different strategies using different instruments and different assets and different time frames. You got 10 studies in your chart. You're wondering if you should add more. You're hoping that the winners compensate for the losers. And you're doing this during work hours at your job. Any wonder why your competition is winning? And you're not focused. You're not becoming that tip of a spear. So there's a movie called City Slickers that came out, man, it must have been 30 years ago. And it had this great iconic character in there called Curly, which was played by Jack Palance. And he was the toughest cowboy that anyone had ever seen. And so they said, well, what's the secret to life? And he goes, holds up this one finger. He goes, one thing. That's all you got to figure out. The rest of it doesn't mean anything. I'm paraphrasing here. So you've got to find your one thing. This is what you'll specialize in. No one else can find this for you. I get questions all the, hey, Doc, what should my one thing be? I don't know. It's got to be something that gives you the rage to master, if I can steal from Brett Steenbarger's vocabulary. So find me one other profession where a rank amateur can compete against a seasoned professional. You can't, right? So focusing on one thing will help you get there faster. And quite honestly, just speaking from my own experience, I was in the same exact place. So I was working it was working in my 3-letter acronym telecommunications company. And I knew a lot of stuff. I would study every night, had a lot of trades going on, no performance, not making any profits. It was a slow bleed down. And I got sick and tired of it until I just swept my desk off and said, okay, one chart, one strategy, and I'm going to master that and not move on until I do master it. And that's when everything turned around for me specifically. 6 months later, I put my notice in, I was done because I'd figured it out, or at least I thought so at the time. And that was during that type of market, right? It's always a challenge. Everything is always moving. So search Curly's Law in YouTube for the scene from this movie, City Slickers. And it's very powerful, and it's really applicable towards you finding out what your one thing is and specializing in focus. Quit being a jack of all trades and the master of none. Okay, step 3, we're going to speed up here. Define your edge. What is your edge against the rest of the market you're choosing to compete against? You know, if you don't have an edge, you don't make profits. So the best edge that you can is being on the other side of the trade from the investing herd. Coincidentally, this is the most difficult place to be. It may take you years to learn how to do this. What I found is that all of us, we really love to be around social situations, right? And, you know, cheering for your sports team and pulling for the same team, that comes naturally to us. Going in the opposite direction from the herd is very difficult. Systems, if you trade in systems and not on feel, not on intuition, but systems, might give you a possible edge. The combination of method or the signals necessary, plus the correct mindset to take the trades that feel bad, plus the right money management, which includes managing your risk appropriately, just might give you an edge against the rest of the market, but only if you specialize in it. Your execution has to be perfect. Chart studies are not enough. There is a mistaken perception that a typical chart study like stochastics, MACDs, moving averages give you edge. They do not. They are just lagging indicators of price behavior. If you're trading off of lagging indicators, probably don't have much of an edge. You're probably getting in very late. You must have an edge versus the crowd. What is your competitive edge? When the crowd goes one way, what is your edge to either move with, like trend trading, or against, such as reversals, the crowd? Trend trading and time decay are two standard edges. But being on the other side of a panicked herd is surely the strongest edge of all. If you were short this morning, you know what it feels like. Winners and losers, don't think of it as personal combat. That if you win, you're taking something away from somebody else. Think of markets as a massive river of opportunity. Just you're watching all this opportunity fly by. And what you're going to do is you're going to stick your thimble in there and then pull out just a little bit of risk. You'll be paid for it, but it's your job to manage that. That's your fair share. So don't think of winners and losers. A lot of people get tied up around something like, oh, if I'm winning, then somebody else is losing and I can't do that. No, it's not like that at all. A lot of times you may be taking the opposite side of an option trade from an institution that is simply just hedging a position. They expect those options to burn to the ground. They don't care. They're buying insurance. They don't care. You shouldn't either. Don't give it a second thought. There's no trophies given award. There's no snowflakes in trading. No trophies awarded based on how long you've been at this. Do you have 10 years of market experience or 1 year of market experience times 10? Edge is not automatically awarded by length of service, unlike some professions out there, which I really was surprised to hear about, right? Okay, that's step 3. Now, step 4 is you got to have a plan. Want to make a business of your trading? Better start planning, right? Your competition has a fully vetted business plan that measures performance against targets every single day. What is your plan? I plan to make money. Well, that's cute. Thanks for playing. You may continue the process of funding others' accounts. Thank you for participating. That's how important a business plan is. A lot of people create one and make it shelfware. They do it because somebody told them to do it, and then they stick it up on a shelf and they never look at it again. Your competition also runs by a trading plan. If the trader cannot follow the plan, if you're making emotional decisions, they'll be fired and the firm will find someone else. It's pretty brutal. They realize the only way that they can maintain their defined trading edge is to follow the plan. What is your trading plan? You should have one for your one thing. You should also have a trading plan for every strategy that you intend to pursue. But for right now, what I'm saying is you only need one for your one thing. Start out, you can't take Normandy Beach all by yourself, right? That's not the way it worked in 1944. You might have been able to take the 50 feet in front of you. You can't take the whole beach by yourself. That's all that you can focus on is that one section of sand in front of you. So step 4, create your plan. Step 5 is to iterate and improve. Nobody gets it right the first time. And just because you did get it right at one time in the past doesn't mean that it still works to this day. Things change in the market, as we've seen over the past 2 years. Quite a bit of change in the market. So let's think about some analogies here in sports. Why do athletes drill over and over and over again? During Tiger Woods' heyday, he would play 18 holes at a tournament and he'd be unhappy. You know that tiger face where he's just like really pissed off about something, even though he's leading the tournament. Like, dude, chill out. He would go straight to the range. Come on, Stevie, we're going to the range. And he'd work on one thing again and again. So at 6 o'clock at night, he's out there in the range. And it's those iterations that make the difference between the masters and somebody that's just playing. Or the guy that sits there and makes, 100 free throws after practice. Muscle memory is their edge. That's why athletes do it. Now in trading, this is where we have to iterate. And I've got this graphic that I've used over the years, which is really, really important. This is the old continuous process improvement. We have to start with identifying what it is that we're trying to achieve. And then we're going to implement that into the market through a set of trading rules, our business plan maybe, and then trading rules. And then we put it into play. We get some results. We measure what we did. Did it meet the goals? Let's evaluate. Did it meet the goals? No. Well, then we need to make some corrections. And this is the magic. This is where you can internalize a strategy. One thing I've said over and over again is you can't trade somebody else's strategy. The presenter in front of me said, if you want signals, you won't make money because you've got to use your own brain. And I believe in that. That is correct. You've got to internalize your strategy. And this is the only way that you can do this is to go through iterations. You make corrections and then all of a sudden you own it. And the difference here is that your subconscious mind is now buying in. It's not sensing risk when you trade, especially if you're making positive contributions and positive corrections and you're seeing the fruit of your labor, because what's happening is this cycle is starting to achieve some altitude. It's getting higher and higher. You're starting to get better profitability and better numbers and better results every time that you go through this development cycle. And after you make your corrections, you may go back to the goals and say, these goals are crap. They're no good. I can't make 10% a day on my account without stressing myself and over pushing the system. So maybe we're going to go for 1% a day, maybe less than that. Okay. Now we're going to put the different rules into play, different results, different corrections, keep going. So what people do is they'll get a strategy, they'll trade it once or twice, and then they'll give up on it and say, I quit. This is too hard. I like this one over here. And then they go over to that one and do the same thing again. Iteration. You got to iterate and improve. And then, of course, you got to keep score. If I were to meet you in an elevator and I would say, what's your profit factor? What's your expectancy? You got to have numbers to that. Be a pro, keep score so you know if and how you're improving. We do it in baseball. We should do it in trading. That's step 5, iterate and improve. All right, step 6, we're getting along here. Build a trader's mindset. How do you do this? You can't just bolt one on. You can't just listen to a YouTube video or a DVD and all of a sudden you're like an ace trader. But your mind is your most important thing. What you can envision, you can achieve. Neuroscience is, it's been around in some form or another for quite some time now, at least 20, 30 years, actually even well before that. But neurolinguistic programming is a new field that has seen tremendous leaps in progress lately. If you have results that don't make sense to you, this is because you're neglecting how your brain actually works. So if you can't explain the decisions that you're making, probably what you're doing is that good old dinosaur brain that we're all built in with, that fight or flight response when we get a stimulate, like either you're going to fight it or you're going to run away from it, is still having hold. You can't do that, right? That's trading not to lose. You have to learn to trade to win based on a different approach. You have to think differently. And this is where neuroscience can help. What you focus on expands. The subconscious mind has no filter. If you say to yourself, no more losing trades, all the subconscious mind is going to hear is losing trades, right? You get more losing trades. If you focus on the negative, you get more of the same negative results. So stop pushing the string across the table. Learn to pull on the other side of that string. Focus on what you want, not on what you don't want. It's a very important thing. Okay, next one, retrain your brain. Your subconscious brain is the core processor of your most basic decisions. It's there to protect you. It's this inner voice that thinks risk is bad, but you can't just jack something in the back of your skull like the Matrix and reprogram it. You have to show it the way. You have to lead it. You have to pull on that piece of string. Doing the work, internalizing your one strategy. I promise you, this will make the biggest difference in your trading career is if you simplify to one thing and then focus on it and just do not quit. This will send your brain a signal that, hey, we're serious about this. We really want this to work and we've done the work. We earn the right to make money in this market. Seriously, you have to do that. You have to get to the point where you convinced yourself that you've done the work, that you deserve to win. And you all do deserve to win, but have you done the work to earn it? Prove your mind that your trading isn't harmful. All right, so that's step 6, build a trader's mindset. And we get up to step 7 now. Build the right habits. This is probably the cutting edge of personal performance technologies and science right now is the notion of habits. Success is not a step function where you wake up one day and start trading profitably, right? It's tiny little steps, tiny little habits, tiny little actions that you take over the course of years that compound and create the results that you're looking for. So first of all, let's talk about goals versus systems. We've all been taught to set goals, but maybe goals are not really what we want to do these days. You don't rise to the level of your goals. You fall to the level of your systems. That is from James Clear. So that's important. Just because we've got these big lofty goals and, we drink a couple of beers and we say, oh, this is what I want to do, doesn't mean that you're going to get there. You are going to fall to the level of performance that is set up in your systems. Goals are for those that want to win once. Systems are for those that want to win repeatedly. Again, I was fortunate enough to share lunch with James Clear a few years ago before he hit it big, and he made a huge impression on my life. And then Scott Adams, you guys know Scott Adams as the creator of Dilbert. Goals are for losers, systems are for winners. He put it even more succinctly. And it's very true. So he did write a book about that, which is right there. How to Fail at Almost Everything and Still Win Big, which is really, really interesting in terms of how he did that. And the James Clear book, if you've not read Atomic Habits, what are you doing? This has been on the bestseller list on the New York Times for the past, let's see, it came out in 2018, so almost 5 years now. And so it's got to be the number one nonfiction book out there. Okay, decide the type of person or the type of role that you want to be. Prove it to yourself with small wins, right? So you can't say, well, I want to be a millionaire. And then if you don't make $1 million on each trade, then you can't prove it to yourself. So if you say, hey, I want to be a profitable trader and I want to win some, make some small wins today, prove it to yourself over and over again that you're a successful trader. You can do that in a very small basis. Every habit that you take is a vote for the type of person that you want to be. Again, a James Clear quote. Want to be a profitable trader? What would a profitable trader do? Ask yourself that. What would a profitable trader do right now? Like if you want to be thinner, what would a thin person be doing right now? Would they be raiding the fridge or would they be on the clock in terms of calories? How would they act? What habits would they display? That's the identity. So look for small wins. Becoming a profitable trader is not something that happens in a day. It comes from the aggregation of these small incremental changes, aggregation of marginal gains. So think about this for a second. If I were to go up to you and say, hey, can you get 1% better at your trading between today and tomorrow? I think all of you would say, well, sure. Yeah, no problem. I can do that. So you go off, you come back the next day and you say, man, I hit it. I'm 1% better at least. I'm better at my trading. We worked at it and I found a couple of things and I'm definitely 1% better today. Okay, great. Now go do it again tonight. Do it again for tomorrow. And again the next day, and the next day, and the next day. If you're able to get 1% better over the course of a year, every day, you'll be 38 times better at something by the end of the year. Imagine what that kind of performance would do. Again, think about this. One strategy, one trade, you've simplified everything. You're focused like a laser beam on this one strategy. That's all you're going to do. And your goal is to get 1% better. Not to put so much pressure on yourself that, oh, I'm going to be profitable by the end of the week. No, just get 1% better between today and tomorrow and never give up. Be relentless about this. This is how compounding works. On the other hand, if you get 1% worse every day, you'll vector down to 0 in about a year. Doesn't take long. We've all been there before. We don't want to do that. We want to go in the opposite direction. So don't discount the power of small wins. They're awesome. And it gives, the human mind craves steady progress. This is why we quit, because we don't get steady progress. Well, no kidding, because we're all over the map. We're trading 15 different strategies on 65 different stocks. We wonder why we're unprofitable. Small wins count to keep you motivated. Okay, so build the right habits. Read those books, by the way, they're great. So that's all 7 steps. So let's summarize. Performance improvement is really taking one step at a time of progression. Step 1, learn to use risk as a tool, not something to fear, but as a tool. No risk it, no biscuit. Step 2, specialize and focus. Don't be jack of all trades and master of none. Accelerate your progress by slowing down, defining and then focusing on your one thing. You're going to be a one-trick pony, and that's okay, because that's what you got to do to break out, to get over that hill and quit Quit rolling that stone up the hill every day to watch it go back down again. To get that stone to the other side, only carry one stone. Step 3, define your edge. Just because you set up a trade based on a statistical or technical setup does not mean that you hold a trading edge. Define what your edge is against the current character and action of your chosen market. And I got news for you. It's not the same as it was last year. Today's market is not the same as it was last year or the year before. So this is a constant challenge. Step 4, create your plan. Creating a business plan will send an important message to your subconscious mind that you are taking this seriously. You deserve to win. From there, create a trading plan for every strategy that you put into play with the market. You only need to start with one. And then step 5, iterate. Treat your trading like an athletic pursuit. Repetition is the mother of skill. Keep repeating something until it's second nature and you've iterated the errors away. This is what Pareto analysis is for. Step 6, build a trader's mindset. Profitable traders not trading against their subconscious mind, which coincidentally knows if the work has been done. You cannot kid your subconscious mind. You can't fake it. These people expect to win because they've done the work. Confidence comes with iteration and that deep work. And then step 7 is to build the right habits. Goals are nothing more than wishes if they're not reinforced with the correct habits. Look to create a system for everything that you care about, setting up for long-term success. Okay, so that is our 7 steps to better trading. And Dave, that's 47 minutes. I said I'd come in at 45. So where can you go from here? So let's push this button. If you need help with these 7 steps, join our trading room for free. How about that? So you can join for 2 weeks for free of the 12-minute trading daily target 100 service with myself and everything below here. So join us for 2 weeks, learn everything that you can, and then decide if you want to stick around. Okay. So the daily target 100 service, we meet every single day at 1100 a.m. Eastern time. Or if you want to, you can watch it later. It's archived for watch later. All trades are communicated via email and SMS. What we do is we do trades on the S&P. We do income trades on the S&P. And we look for, like this week, a little bit too much risk, not trading too much until Friday, until after jobs, letting the FOMC get out of the way, right? So we don't have to put ourselves in peril for days like today with the big moves. So we're very conservative about these things. Trades can be placed with less than a $2,000 account. We do one thing and we do it well. We do it every day. Online strategy courses included, 2 weeks of free trial. That's 10 days of sessions that you can join us for nothing. And then after that, it's $147 a month if you want to stick around. And so it's like a full trade coaching session every day. That's at 12minutetrading.com/T100ST for Synergy Traders. Okay, so that is next. And performance, these are numbers that we've done since February. So we've gone to a different strategy, which is a little bit lower probability, higher reward to risk, and it's been great for this. So we pulled in a 31% return on capital during this time. We've won 96% of our trades. Our profit factor, which means for every dollar we lose, we gain $4.91. You can just, that's an ATM, guys. 12minutetrading.com/T100ST. We risk very little on these trades. And this is sleep at night kind of trades. Okay, so thank you for your attention. Thank you once again, Timing Research, for inviting us. My contact information, you can reach me, Doc at 12minutetrading.com. Although I'd love to see you in the room. We'll have this special up over the weekend. 12minutetrading.com/T100 Sam Tango. Okay, so if there's any questions, I've got a few minutes here. Otherwise, Dave will get set up for his next presenter. Any questions, comments, complaints, anything like that, let us know. Or you're welcome to reach out to me later on if you have something. Are these day trades or overnight? So typically they're overnight. So we're typically doing these. The one type of style trading we're doing is about 5 days to expiration. The typical hold time is about 2 trading days, and they're usually gone after 2 trading days. Rarely do we hold them for the entire 5 days. Some of the other ones that we're trading are a little bit longer term. So those are about 45 days. So those are much longer, much slower, much easier to handle the volatility. So no, these are not day trades. Any other questions, folks? Thanks again for your attention. Can you watch a repetition of the, yeah, you get repetition, man. Repetition is the mother of skill. Yeah, Dave is going to send out the replays for these.
Yeah, that will be available in a few hours as soon as I can get, I'm processing the recordings, and those will be available on Timing Research, or you can look for Timing Research on YouTube, Substack, or your favorite podcast app to get the recordings there.
Okay, there's a question here about the trading room hours. Daily trading room, 1100 ET. So I would say the minimum is usually half an hour or something like that. And the maximum is usually about an hour. So it all depends on the number of questions and the interactions and what's happening in the market. Some days we're just coming in and plopping our trades into there, and there's, it's a very quiet day and not much is going on. We're usually done in half an hour, 20 minutes. Other days there's lots going on and we'll spend the entire hour. Can you start with $100 of capital? Probably not. I think for $100 of capital, the best thing you can do is buy some books and keep socking it away until you've got capital that if you're trading with $100 of capital, you're flying right over the tops of the trees, and all you need to do is dip one wing and in you go. So what I would do is I would pull back and start aggregating capital and start working on your strategies and start building your edge so that when you're ready. But otherwise, I see so many people that the instant that they have $10 of risk capital scraped together, they're throwing it in the market. And you might as well just go to Vegas on something like that. It takes dedication. It takes an edge to do this. What market do we trade at 1100? Generally, it's the S&P 500. Why trade anything else? I mean, sometimes within 12-minute trading, we'll trade the NASDAQ 100. We'll trade the Russell from time to time. I mean, sometimes we'll have a little bit of bifurcation where one market will set up better than the others will, but generally they're kind of all running together, and the S&P is the biggest, baddest thing that's out there. So this is what we trade. The P&L slide. Let's see, where's the P&L slide? It's one more here. So this is our low probability strategy. We've done 25 of these since 2/3/2023, so the last 2 months, and that's returned 31%. So before last year, we were doing much more of the high probability, a low delta kind of trades. But in this market where the implied volatility has dropped, the risk profile or the risk premium has dropped, those are too aggressive to play in this market. So we've had to change strategies to a lower probability, higher reward to risk, and that actually matches much better with this market. Okay, any other questions that I can help you guys with? Anything else for today? Well, Dave, again, thank you for inviting us. And once again, I'm going to end on this slide here and invite you guys to join me at 12minutetrading.com/T100 Sam Tango. And I hope to see you guys live tomorrow. Okay. Thanks, everybody. Have a great afternoon and enjoy the rest of the webinar. And again, thank you, David.